Ladies and gentlemen of the crypto space, we're live on a Friday, April 18th at 11:31 a.m. This is a topic we indirectly have covered over some years, and we all want to be good investors, better investors, but there's a lot that goes into defining what investing is. And really, a lot of it reduces to fundamental concepts of psychology. Now, this is a bit of an atypical introduction as for what folks are used to or accustomed to. But this is probably one of the most important topics. Why do we do what we do? How do we choose? What decisions are we presented with that we have to contemplate and figure out how to be rational? And then that is very important because there's too much thought, there's too much noise. That's a topic I've covered. Um, how do I even start this type of thought that brought me to this? Aside from the fact that I came across this very nice thread on social media that was very useful. Maybe some of the quotes. And the second I read the quotes, I'm like, oh yeah, that's useful. And how does this relate to investing? So it's all about control and it's all about perception and it's all about serenity and things of that nature. What are we in control of? You are in control of your choices, the decisions you make. So that the prerequisite there is what information are you looking at and how are you interpreting that information to make hopefully a rational decision? Is it excess information? Is it information overload? Is it noise? What's the quality of that information? So we'll start with the first quote. You have power over your mind, not outside events. You have no capacity to influence what the hell is going on out there. This politics, this economics. You can't do a damn thing about it. All you're doing is sitting here, like me, in my chair, seeing data and like, what does that mean? And a good takeaway is what I do in industries. We have a meeting, we talk about shit, and then we write down action items. What are the action items? What are the actual choices and decisions that could be made? And with regard to investing, it's pretty simple. Do I buy? Do I sell? Over what time frame? And what are the other conditions involved in an actual investing process versus what a lot of folks think they're doing? Realize this and you will find strength. That's the most this is a great opening quote. This is the foundation of the serenity prayer. You got to understand what you're in control of, and you're only in control over your mind. You're not in control of shit out there. And the sooner you realize that, the sooner you could focus on the things that you're actually in control over. Second quote was, oh, this is a good point. Stoics don't ask, why is this happening to me? How is this making me stronger? All right, this is relevant with regard to losses. All right, your portfolio is depreciating. Oh, oh no. But don't go into I'm going to sell. That's not the first thing you're supposed to think about. Like, why is it going down? Did I make a wrong decision? Why is this happening to me? Now that you come to the realization, what can I actually do about it? Okay, do I sell? Why? What are the conditions for selling? Is your thesis for buying invalidated? You bought something, you chose to buy something. Is the reason you chose to buy it flawed? Is it wrong? And for myself, that's the only reason to sell upon invalidation of a narrative. And what time frames are involved in potentially invalidating a narrative? All right. Um, could be very long time frames. Um, being early is often indistinguishable from being wrong. So even though you're early and you could be experiencing significant depreciation, it doesn't mean you're wrong. It means you're early. So that's probably the hardest part. Attempting to assess or differentiate between being early and being wrong, because being early doesn't entail you're necessarily wrong. for instance, I exited Aura. That's probably the only position I've exited in quite some time. I could very well be proven wrong to exit, to have had exited it. But then there's other components like opportunity cost or, all right, I'm done. I just don't have the patience anymore. And patience is an internal burden because what deflates reinflates. All right, it deflated. All right, next time the market expands, it'll reinflate. So, what was the thesis? The original thesis was to carry characteristics of forex markets and liquidity financing. So, my my investment thesis wasn't wrong. What I got wrong and what ultimately led to my um, disposal of the position was that it was overexposure. Or it does well. All the forex exchanges do well. So why do I need exposure to an additional forex exchange? So I basically chose the stronger of the two exchanges. And frankly, Aura is not even a forex exchange; it's a derivative market, similar to Convex as it relates to Curve. So I did retain balancer exposure, and the reason I did was because of base layer maximalism. All right, fine. That I was able to justify, and maybe the same reason I exited Aura is the same reason I exited Convex, base layer maximalism, and my distaste for derivatives, which is business number three in these crypto markets. And generally speaking, that is the construction of my current portfolio. It's forex markets credit, great, check, check. Derivatives, no check. I do not have any exposure to basically any derivatives. And then obviously four and five, I can't do it. Skipping number three, as you can see, and liquidity financing and liability printing, and those are probably bigger than forex in many regards. So the original thesis was valid, but ultimately invalidated, thus liquidated, because I didn't want exposure to derivatives and it was overexposure. So it was unnecessary. So you can exit positions where your original thesis is valid, remains valid, but you invalidate it for different reasons. That's an interesting train of thought. Quote, the problem is not what happens to us, but how we react to it. Well, that is a great quote because you got some shit going on. We ultimately, as individuals, have a choice. Do we react or do we not? And this is very useful in times of panic, in times of significant liquidity cascades, where the market is bleeding red, or the market's bleeding green, or just going to the moon. What do you do under what conditions? So the second you have an adrenaline response or a fear response, first and foremost, the most important thing to do, to not ignore it, but to recognize it and likely take no action immediately. Because if you are responding immediately, that is probably impulsive. Um, the first thing you need to do is to wait for the fear on the downside and the greed on the upside to subside. So go sit in a park, listen to some birds chirping, put on some music, sit in a sauna, whatever the hell you have to do. You have to clear your mind. You have to let those emotions subside. It's one of the biggest things. Our base state of existence is what monks would talk about as an ability to stop thinking, not sleep, but hear the sounds of existence, the rhythms of existence. And when you could clear your mind and those emotions subside, then and only then can you make rational decisions. So, how do you react to it is probably one of the most important things that I could say today. How you don't react to emotions. Emotions have no business in capital management, so that's a big one. You can't control people, events, or the past. Well, this is part of serenity. You have absolutely no control of anything outside of literally your brain and your brain's capacity to control your motor functions, to click buttons, and your decision making processes results in motor functions or verbal output. So you have no control over anything but that. Everything else is just information in, processing, and output, either physical or verbal. You can control how you respond to what you focus on. What you focus on, clear your mind. Greed on the way up, you got to wait for it to subside. Fear on the way down, you got to wait for that emotion to subside. Then and only then can you focus and make rational decisions. We suffer more in imagination than in reality. Responding impulsively is just, it's the first and foremost flight or fight. That is a response to a perception of suffering. Depreciating portfolio doesn't necessarily mean what people think it means, because what deflates reinflates. Under what conditions? When can those conditions potentially be actually occur? And that's why we talk so much about the technical data and the 6 month DXY chart and the structure of the system and the three, the trifecta of bullish confluence and DXY down, move down, and long end U.S. government debt appreciation, collateral appreciation. So, under what conditions would the suffering subside? The suffering of depreciation. So, is it really suffering if you had knowledge that next year markets would be up? Here's an interesting thought experiment. If you had knowledge and you knew that next year markets would be 10x higher than here, yet the market just crashed 50%, would that be suffering? Would you feel like you made a bad choice? Would you feel like liquidating because you knew the markets would be up? So is the not having of knowledge that the market will be up in the future um, justify or validate that feeling that you did something wrong and you sell? And so that the point is, you go back to earlier quotes, that feeling is irrelevant. So what matters is getting rid of that feeling and making good decisions about where you speculate the future will be. That's what Druckenmiller talks about. You're allocating capital to markets, thinking about where they will be in 12 to 18 months. And I do even longer. I'm talking 2030 type foresight, or where my mind is when I'm allocating and doing different things. Um, you believe that fear is real when it's off an illusion before you spiral. So that's the point. You get this anxiety, this feeling in your stomach. Oh, I made a bad choice. I bought fart shit coin, and it's down 90% from where I bought it. That's not an illusion necessarily, because after due diligence into the substance and the fundamentals and what is it really, um, probably wasn't effective due diligence in the first place. It was probably an impulsive buy. There was probably an anxiety or a heightened sense of what the hell am I doing when making the purchase, which is akin to the emotional response to gambling because you have no idea the potential outcome. So it's that is the other side of the equation. There's the emotional response associated with market activity. Oh, market's going down, or the greed. Oh my God, it's going to the moon. But what about the emotions associated with purchases? What you own? You can't make a good decision if you're having an emotional response like, oh, oh, I'm going to buy it. Click, I bought it. I bought it. Yeah, get rid of those emotions. Have no business in capital management. Do you have? So I like these points. Do I have control over it? You have control over nothing except what you think and the actions that you take. Is it happening now, or am I imagining it? Most of the emotional response you're imagining. There should be no fear of a market depreciating or a market appreciating. Fear is associated with a threat. What are you threatened with? the market deflates, eventually it reinflates, especially with regard to quality. When excessive due diligence or effective due diligence was applied, understanding fundamental properties and defined businesses in crypto markets, for instance. It's an illusion what most people respond to. A wise person is someone who has seen the world as it is, not as they wish it to be. So you're going to have both because you're going to have your expectations. So I often say uh, we are satisfied when we meet our expectations. Like if your expectation is to turn $100 into $1 million, not a realistic expectation. But if you have worked in industry between in your 20s and you saved up $100,000 in your by the time you're 30, and your expectation is to turn that $100,000 into a half a million dollars, it's not the most unreasonable expectation. It's going to be a lot of volatility along the way, but it's not a highly unreasonable expectation. So you see the world as it is. We sure as hell have seen significant changes in the world. The entire administration has gone full 180, and the, so compared to what you want, compare not as you wish it to be. This is where folks mislead themselves. Oh, the Fed has to turn on QE and they have to cut rates. We've discussed the world as it is, so that is a bit of a um, knowledge requirement regard to a depreciating dollar, how it increases the purchasing power of foreign currencies, and other nations can print foreign currencies, and how collateral volatility collapses, it increases the capacity for the world to expand credit, thus currency supply. So that's seeing the world as it is, not as you wish it to be, where the entire potential for your investments is a result of the Fed cutting rates. So you got to break down the knowledge barrier to be able to see the world as it is. Yeah, life should be fair. No, 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 no. This is actually a very big philosophical point. Life should be fair. Sorry, guys. This is why Darwin's work was so pivotal to understanding the nature of animals, and there's nothing fair about life. If you're able to carve out a piece of resources, you're lucky. The vast majority of people don't have any resources. In fact, the poorest people, socially, Social Security, or literally, you know, EBT in the United States, they're wealthier than so many people around the world. So many people around. I mean, think of rural Africa or just any impoverished area around the world. So there's nothing fair about life. Um, there's compassion, there's empathy, and there's things of that nature. There's nothing inherently fair about life. I mean, literally, you can eat dinner tonight and you killed an animal, probably a chicken or a cow. That doesn't seem fair, but it was the choice that was made. Nothing fair about life. This isn't a game of fair. This isn't a game of equality and equity. Those are reasonable goals and honorable intentions, but it's not necessarily fair. In the end, we fight for what we want. We fight for what we think we deserve. And frankly, no, I don't like that. No one deserves anything. This life isn't fair. So no, reframe your mind, reprogram your mind. There's no deserve. No one deserves anything. Entitlement. This whole retirement and Social Security entitlements. Oh my God, entitled to. You ain't entitled to shit. Uh, We're lucky that the Earth doesn't have an opinion because otherwise we're not even entitled to oxygen, but it just happens to be there, and Earth doesn't have an opinion about it. Um, Entitlements. Get that out of your mind. That will negatively affect the capacity to manage capital for sure. People should be kind. No, My base case is don't trust folks. Don't trust first, prove first, and then you could begin to trust. So these are just fundamental observations of reality that I hold dear. These are things that I believe. A lot of people trust first, and then their trust is broken, maybe. So prove first, then trust is something that's important. Hard work should always be rewarded. No, you got to you got to fight for your hard work to be rewarded. And that's the same due diligence we do with investing or putting in time and effort into a collective organized effort, aka work for a company. You know, if the you realize something I say often about what is work. Work is a process of convincing. A resume helps convince someone else to give you money to do something they don't want to do or cannot do because they need maybe many people to do it. So hard work isn't always rewarded unless you not demand, but unless you negotiate, unless you establish that it should be rewarded. That's what work is. Reality doesn't care about, oh, that's a good one. Reality doesn't care about your expectations. Reality doesn't give a shit about anything. Reality doesn't have an opinion. And this is expectations. You want to meet your expectations. So they often say under promise, over deliver in industry. So you want to have expectations that are low. Not failure. You don't want to expect to fail because you have to be a positive person. That's important for your well-being. But you want to have reasonable expectations because then when you exceed your expectations, you feel satisfied. You have met or exceeded your expectations. That's very important. Instead of saying this isn't fair, say this is reality. What can I do about it? All right, great. That is something that I hopefully have expressed over the years. Um, what is happening is happening. And that's why I look at the data. The data tells me what's going on. What am I going to do about it? Okay, that's capital management. Am I going to exit something? Was one of my original theses wrong? Did I make a wrong choice? Did I make a wrong decision? What am I going to do about it? And thus far, I made good choices. There's nothing to do. And maybe we'll end the stream looking at some data to give some comfort in where we are. True measure of a person is how they respond to adversity. God damn, these ancient folks were so smart. These are great words. So adversity, you have your goals, you have your dreams, you have your expectations, and those are in regards adversities because you want to achieve them, you want to surmount them and overcome them and do more than that. So how you respond to these burdens and how you respond to these responsibilities, how you attempt to meet your goals and expectations. That is the true measure of a person. That maybe reduces to the one stereotype that I do subscribe to. Everybody is equal. We're all humans, which means we're all animals. No, it's an attempted cow noise because we're all a bunch of walking, talking animals. But the only difference between people is two stereotypes that I subscribe to, and I find it reasonable to tell people that they are decent stereotypes. There are people that do and people that don't do. Now, you keep it broad because obviously, you get on thin ice with stereotypes. You either do or you don't do. There's plenty of people that don't do. There's plenty of people that don't engage with adversity. They don't attempt to better themselves. They don't try and find that next level, try and make better decisions, try and understand something that they did not understand. And then there's people that do. The other stereotype is there are rational people and irrational people, which is maybe do and don't do. a rational person would do. So maybe they're one and the same, the two stereotypes. But that's how I break down humanity. Gives a shit about ethnicity or culture. We're all just a bunch of mooing cows. Everyone thinks they're so important. We're not. So there's people that do, there's people that don't do. The rational and the irrational. Find your inner captain, be a rational person. That's probably one of the few ways to be different as a human. Be rational. Um, is there anything else? If you're feeling triggered, pause, don't react. That's actually a great recommendation. First and foremost, you never respond impulsively. You always stop. You wait for the emotions to subside, and then you make a rational choice. Is an action warranted? Should you do something that should you take action? Should you sell something? Should you buy something? But it shouldn't be emotional. These are calculated decisions based on due diligence and information and knowledge. See the situation as it is. Look at the data. If there's excess volatility, it means some shit's going on. That means a lot of people are emotional. So that's actually an interesting point. You yourself might be emotional, which means you need to chill out. And if other people are being emotional, you should probably chill out also and wait for shit to calm down. And that's like a volatility event. Does that make sense? When the market's extremely volatile, you probably shouldn't be doing things. Even if you're not emotional about it, because there's excess risk because everyone else is emotional, therefore they're not going to be acting rationally. And some serious shit is probably going on in their minds. Choose the best action, not the easiest one. These are some good philosophical points. Don't tie your self worth to external achievements. This is kind of what I say with I judge my success based on my adherence to my own rules. I don't judge my success based on net worth. That's a bunch of bullshit because the market determines my net worth. I have no control over that. I am in control over my choices, over how I manage capital. Do I buy this? Do I sell this? Do I learn this? Am I interested in this? Five businesses. Which of the five businesses do I appreciate? Which of them do I want to align with? Do I want to own? Those are my choices. That's actually a really good one. Money, status, and fame are unstable. It's irrelevant. It's irrelevant. This comes back to the core of everything I try and teach about capital management. Buy a salary, the pizza shop stories of years ago. No one ever told me you could buy a salary. They always said you got to get a job when you get out of school. All right, so great. Why are you getting a job? What is a job? What is work? Convincing someone to give you money to do something they don't want to do or can't do. So you get the money, then you could start to buy a salary over time. Now, all of this equation starts great when you're young because you have much more time. You could buy small salaries, 50 cents, $1 a week, and you build over time. That emotion, that instant gratification of wanting something now, that's that's a bad thing. And it's very hard to teach kids this. I don't think I could if I was myself talking to myself when I was 18, I don't think I would be receptive to this type of conversation. Which is unfortunate. 'Cause if you're 18, you have some great opportunities because between 18 and 30, my goodness, what you could do with regard to capital. Absolutely astounding what you could do with capital between 18 and 30. With a standard job at Chipotle, a job at Geek Squad, Best Buy, maybe not a job at a supermarket or a Walmart, but maybe not Chipotle either, but an increasingly technical job. That's why I like the Geek Squad. There's that would pay a little bit above base type salary, 40, $50,000 a year. Would change at 18 to 30. That changes the equation. That's an extraordinary amount of money if it gets allocated and invested into buying a salary. Anyway, time is a fascinating subject. And kids have so much time on their hands, they don't know what to do with it. And they often say, okay, I could do this later. I could start managing capital better later. It's very unfortunate. Money, status, and fame are unstable. God damn right they're unstable. If you rely on them for happiness, you'll always be chasing. It's irrelevant. The market dictates how much you'll be worth, not you. 2 years ago, all right. So, all right, um, Talon, very nice thread. Good for you. Um, it's all about psychology, capital management, all of this. Looking at this data is all about, first and foremost, you got to understand yourself, your goals, your expectations. Got to set reasonable goals, reasonable expectations, and you got to be in control of your emotions. Curve 58 cents, 10-year 433, decent amount of volatility, 121% today. Move has come down from 140, give or take, to 114. There's a heck of a move spike, significant amount of volatility. And the takeaway that Bitcoin's at $84,000 is quite extraordinary to say the least. Nasdaq was a decent move down. Was it yesterday? Yeah, that was a decent move down yesterday. Not compared to last week. That was very volatile. Significant mean regression in many regards. It wasn't even a mean, it was a level regression. Frankly, based on this single candle, it was a retest the previous all-time high. Nasdaq 100, that is. Even better with the S&P. Damn. Damn, with the wick going right basically into the previous all-time high. That's wild to see. So from a technical standpoint, not an Elliott wave standpoint, like a structure standpoint, this was a retest. I mean, that's it, right? That's literally what it says. That's the information. It's come back down to the previous high and you retest it. So there's nothing that's abnormal about this structure at the highest of levels. Clearly, it starts to trend down, then it's not a retest. Then here, for instance, this, then all of a sudden, everything above this line is a failed breakout, which is what we see in a chart like oop, DXY with the 107.35 line. Love that line. Failed breakout, reattempted breakout, didn't really get there. Failed breakout. Failed breakouts. That's what happens, and that's what could happen when you retest a previous all-time high, such as what we've been looking at on NASDAQ. Anywho, China's still under significant pressure. They are weak. Dollar is very strong compared to Chinese currency. Let's see how Japan's doing for the fun of it. It's the euro that's really propping up the DXY or pushing down the DXY. Euro's got some nice strength in it. Whole structure of global economics is really going through a contortion. Everything is changing in so many regards. But I would say, from my understanding, it's changing in ways that I like to see. Now, the general public in the U.S. and a lot of politics generate a huge amount of noise. But I'm in favor of a lot of the things that I'm seeing. I'd love to see things more healthy, a more balanced budget. Don't spend more than you make. I mean, God forbid government actually uh, uh, encourages good parental behavior or parental an example for children. Don't spend more than you make. Holy fucking God. That's like the holy grail of what every parent wants to teach their children. And look at the government. They are the worst example of that, creating the most epic debt pile anyone could ever describe it. Gold 33.26. If you need a phrase to encapsulate what gold has done, this is an absolute parabolic advance. That is just straight vertical in so many regards. Gold has been but gold has been a better investment than the S&P or Nasdaq. You could have dropped all your money into gold between 2008 and today, and it would have been a better investment than a 401k, a Roth IRA, any potential stock you could have bought, it's a better investment. It's gone completely parabolic. Remarkable. VIX coming down back on the 30. So VIX coming down, move coming down, oil down at 63, creeping up a little bit. Not too much to take away. It's still down at 63. What an insane number. I'm surprised gas prices aren't cheaper, but it takes time for inventory to get through the system. Just like egg prices. Egg prices are going to come down further because the price at market, futures market, has come down significantly, but it takes time for inventory to get through the system. Eunice in the house. Good day, Cap. Mix, mix. This anticipation is stimulating. That's a good topic. Good topic. So many folks look at the numbers and the data. And you really need to understand why and how to look at the data. And to do that, you got to understand who you are as a person. And these types of thoughts, these philosophical thoughts, hopefully help. Oh 07? I don't know. Nick, Cap, regarding rule number two, I remember years ago looking for validation to buy on this or that asset in a bull season. Does the current iteration mean that assets are not to be acquired during run ups? Yeah, my so this is going to vary from account to account, from person to person. For instance, if someone is just trying to figure out what to own in a portfolio, they're not executing rule number two. They don't own anything. They don't own any assets, so they're probably wanting to start owning assets. But for folks that have been doing this for years and they own assets, how much do you own? Now, depreciation of assets and net worth aren't part of the equation. What's pertinent is what do you own? What exposure do you have? And in my position, I have the exposure I want. The most recent acquisition, I think, was like Liquidity, which has significantly depreciated, but I have exposure to Liquidity. And that's okay. And I understand that. And the thesis for acquisition is not invalidated. Um, Price depreciation doesn't invalidate a thesis. Um, so it will what deflates reinflates at some point, especially when the market gets frothy, which is an inevitability. Um, does the current iteration mean that assets are not to be acquired during a run up? So for myself, all I can do is speak for myself, just like the entire introduction to the stream talking about philosophy. I can only speak for myself. My intention is with all of these pizza shops and all of these salaries that have been purchased, I will not be purchasing assets as the market inflates during whatever people like to define as the next cycle. I will be selling for cash, then stacking cash all the way until Pico top. I will be stacking cash until all the way Pico bottom. So probably until like 2027, every week, just cash, 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 cash. And then um, my intention is to do better than what I did last time in 2023 and 2024. Probably early 2025. I bought at not too expensive, but expensive prices relative to where the market got to in November of 2025. So I wanted to own, I wanted to have exposure to these types of businesses that I prefer. And I should have waited, waited, waited. And that's what Buffett is just so brilliant at. He waits. It's like, when you're choking someone and you eventually see the lights go out. Okay, that is a very bad example. But he waits until someone is glazed over. He waits until the very last second, until the, that was a really bad example. Don't tell anyone I said that. But that's what he does so well. He waits and waits until it's like, all right, fine. I'll buy your company so you don't go bankrupt. All right, that's my expectation. Sell, 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 Pico top, sell, 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 and just wait until like now. Look how many people are left in the market. It's relatively quiet. People are disillusioned. They think the world's ending. They think the system's going to crash. Sentiment's the worst it's been since 2008. now would be a time to buy, but not for me right now because I've engaged rule number two because of what I've done in 2023, 2024, and 2025. But that story would be different in, let's say, 2028 for myself. So 2025, 2026, 2027, selling all the way up, selling all the way up, selling all the way down. And 2028, as everyone becomes disillusioned again, thinking the whole world's going to frickin' end, all right, then you could reevaluate how much exposure you have to things. Or if there's some new exposure you want, now you can consider it because you stack the bag of cash like Buffett did. 300 and what billion dollars he's sitting on. Absolutely insane. Fugu, good morning. Good morning. Captain Zem claiming I I am in total woosah mode. Maybe it's because I've been going to a sauna every day for I don't know. It's got to be 4 or 5 months now at this point, and I'm in maximum Zen mode. Clearest mind I've had in a long time, if not ever. Everything is noise. Even our own freaking mind is noise. It's all noise. When you sit in a sauna and you play like a solfeggio or something, some nice calming music, and you realize the base state is nothing, is not thinking anything. And then you're like one thought at a time. And you start to build from that base state of calm and nothing. Then you can have a clear mind. And without that clarity, you don't have maximum rationality. And I intend to be the captain of rationality. Peter, good morning. Good morning. Nick, good morning. Good morning. Fuku, but we can see few discounts. Some prices offer better. Yes. So it sounds like you're not in rule number two. It's cool. I just define the rules. I follow my rules. Everyone could follow their rules. People could like my rules. They could subscribe to my rules. That's everyone's individual capacity. So I'm not in rule. I'm in rule number two, and I would some point I would like rule number one. But I don't think that's going to come for quite some time, and that's okay. It'll come. Say like 20, sometime in 2027, 2028, I'll re-engage rule number one. And obviously, depending on market conditions, maybe there'll be an acquisition that is appropriate. But for right now, myself, I'm in rule number two. What I do is completely not relevant to someone else's portfolio. As I said, if you have no assets and you want to get into investing, it's probably rule number one: own more assets. All right, you got to have some assets. So what do you buy? And then it's the whole conversation of never spend all your money because that's don't spend more than you make. That has nothing to do with investing. That's literally just capital management 101. So now it's what do I buy? How much money do I have? How much could I spend? How much money do I need for bills? How much savings do I need to, just in case if there's a disruption in income? Well, you got to factor all these things into the equation. So sounds like you're not in rule number two, and that's cool. Um, that's going to be a subjective choice. Peter, yeah, I know a lot of shit I say. Or you're probably saying, "Don't tell anyone I said that." Yeah, seriously, don't tell anyone I said that. Not that kind of guy. Nick, also regarding expectations, do you feel about comparing the previous all-time highs? I like a retest of all-time highs. That's always healthy because a price point is a manifestation of aggregate sentiment. Everyone's like, all right, this is the price that I agreed to buy it at or I agreed to sell it at. So when you see a previous all-time high, this was, I mean, look at gold back in 2011. Everyone agreed that this was the top of the price they'll buy it. I'm not going to buy anything higher than this. I'm not buying it. That's what that peak means. Nobody wanted to buy at a price higher than that until 2020. And a few people said, all right, I'll buy at a price higher than that. Very interesting psychology when you realize this chart is tells such a psychological story. and that failed. And people are like, "Oh, all right, fine, I'm not buying at a price higher than that." And again, all right, I'll buy at a price higher than that. Previous all-time high. Failed, but then now, so now these are all-time highs. And then people just said, "Oh, no, 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 no. I'm going to buy at a price higher, 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 higher." People is just justifying buying at a higher and higher price. That's fascinating. And this is exactly to your point, Nick. People are justifying buying at a previous all-time high because technically a run-up. Oh, here, look, all-time high, all-time high, all-time high, all-time high, all-time high, previous all-time high, previous all-time high, previous all the way up is a previous all-time high. It's like a price discovery type of statement. Hope that helps. That's a decent observation. Yeah, all-time high is a big deal. Um, Now, especially with like businesses. So notice I'm not looking at whiff or bonk or what have you. Just that all-time high is not so significant because you have to inspect the psychology of why people bought. The odds are people bought meme coins for no logical reason. The only reason to buy a meme coin is because someone else bought it before you. For instance, gold is a collateralizable asset. It also has a demand because it's used in industry. It's a metal, has conductivity, so on and so forth. So there's a reason. If an investment is absent a reason, not an investment, that period. Mic drop. Rare to catch a live stream. Forgive the pestering. No, no, that's the whole point of this. Most of my stream is Q&A. That's why I jump on the stream. I come up with some sort of idea, and then I'm like, all right, I'm going to have an introductory statement because I just go with an idea. And literally today's stream, for a perfect example, was this thread about philosophy. They talk about it, and then I'm like, all right, let's Q&A, baby. And that's my streams. That's what my streams have been for years now at this point. And I like that. I wouldn't have it any other way. Fugu, well, I'd stop DCAing it. Well, DCA is another story. And I could cash everything. Oh, oh, cash everything in. That's a hard statement, my friend. Okay, so portfolio size, goals, intentions, DCAing is just fine because DCAing is not necessarily cash flow. So, for instance, if you're 18 years old and you can't buy like a $50,000 clip of curve or $100,000 clip of curve, I would tell cousins and family like, buying $20 a week of Bitcoin. $20 a week of the damn S&P, even though a Nasdaq's going to outperform the S&P, and frankly, gold has outperformed both the Nasdaq and the S&P. So you probably should have been DCAing gold. So DCA works, and that is an effective methodology for a smaller portfolio. So what is that threshold between a smaller portfolio that engages in like DCA and total net worth inspection versus a cash flow type of portfolio? I can't state the answers to that. I don't have an answer for that. But I can say that that boundary, that threshold exists. I know that for certain, but that's going to be different for everyone. What is that threshold where you have enough capital so you can engage in cash flow type of investing? Can't answer that. But DCAing is great, and even for myself, I probably should be, but I don't because the cash flow is like. So that's the reality. The cash flow is like, all right, I don't need DCA. But if you can't cash flow, you probably certainly should be DCA. I don't know about cash everything in. That's a strong statement. So notice, what does cash in mean? It means you're investing in dollars or currency. The currency isn't really an investment. What are you going to do with that currency? Currency is an intermediary. It's used as a common denominator. Where's that capital going? So this plays into a lot of what I talk about global economics and capital flows. Like, crash isn't a crash. It's a liquidation for some sort of temporary position in a currency, and you're going to allocate it to something else. an emerging market trade, an investment. So what's liquidation to what? I said, all right, fine. Liquidation of investments into a house, which is a property. And if it's crypto, it's property. So you're liquidating property into property. Property is an investment to a degree. So it's a quasi investment. Can be an investment for many people because it can produce cash flow, pretty shitty interest rate, but that's another story in the US. I don't know. These are very philosophical topics, ambiguous, vague, and it warrants just this this nonstop flow of shit that I speak so that other folks may interpret this shit that I speak and come up with ideas of their own. I mean, that's the whole point. But you make good points. So there's a lot to think about, I'm sure. Best part of the whole ideology is that XYZ could be used simply to evaluate anything in the of course. Well, it's balance sheet inspection. In traditional finance, it's called value investing. Um, is the balance sheet healthy? What's their bottom line? Is their bottom line red or in the black? Is their income greater than their expenses? And expenses include debt servicing costs, OPEX, CAPEX, human resources, so on and so forth. So it's XYZ ultimately it's a very simplified statement for value investing and balance sheet inspection. And it just so happens in crypto, there's no debt, there's no real estate, there's no real human resources, there's no operating expenses at all. Even the electricity for what would traditionally be DevOps is crowdsourced because that's what EVM networks are. No DevOps to maintain servers or fix, I don't know, crash process, in your AWS cloud cluster. No, it's EVM network. It's a fixed contract. So, good points. That's what I meant to say. I will convert my yields to stables, but only when I'm satisfied with that. And then at some point, it will simply reach escape velocity. It will fund itself. Yeah, these are reasonable statements, and everyone will have their own interpretation of the stuff that I say. And I look forward to years to come where we look back, and so many of you will be like, "You remember those stories? You remember it changed everything in the way I thought," and I will be grateful and humbled when I hear these stories in the coming decade, let's say. I DCA silver because XMR stopped gold after it went to 3,200. Uh, Silver, gold, they've proven to be great things to dollar cost average, even Bitcoin. But that's the extent of what I would really think in terms of dollar cost average. I tend to associate DCA with cash, and I lump gold, silver, dollars, stablecoins, Bitcoin into this cash bucket and the investments bucket. They're not the same. That's the way my mind sees it. So that is a great form of cash. It's a volatile cash, and gold has significantly increased in nominal pricing, but I still define it as cash. I don't define it as an investment. Investments produce cash. Well, that's my definition. May be useful to other folks as well. Just showed me another perspective on cash. Yeah, this is just my brain regurgitating the stuff that I've come to believe and understand, and I'm very hopeful that it's helpful to folks. Amen. Mixed compounding is like cashing in. Yeah. Compounding. You know what Einstein said about compounding. So, a lot of criticism about the increasing supply of voter escrow and V33s and complicated. It'll take some more time to see how established these types of business models are because we know the IPOs on the stock market have launched some big companies, and a lot of them, it's not to be not to be dismissed. The relationship between like an IPO or a capital raise on like Fjord Foundry or maybe a private ICO type of or TGE, token generation event, which is really like an ICO if you think about it. Um, it's all the same. It's all the same. Business is business, whether it's TradFi or digital. What's the difference? Difference is the balance sheet, the debt, the OpEx, the CapEx, the human resources. That's the difference. But that's why maybe I've been the strongest proponent of stating that these are businesses, digital businesses that produce cash flow. No different than dividends in a traditional financial conversation. I'm posting from the bottom of a 7-inch outhouse hole I'm digging. I am a doer. Nothing wrong with an outhouse. Shit's got to go somewhere, and you might as well put it in a hole. That makes sense to me. I and that is certainly a doer. Uh, because if you didn't do that, shit would pile up. We're not being metaphorical here, are we? That's good stuff. Good stuff. By the way, Grok does an amazing job with XIZ if you provide him with enough data. Grok is on another level. I stopped using ChatGPT and certainly Claude. They just hallucinated too much, and they just were not. They didn't have enough context. It didn't work out as I wanted it to, and Grok's on a whole other level. It's just it still has shortcomings with regard to context and like writing the large documents I've written. It's much better when focusing on individual section. You throw a whole document at it, it just gets too much. Um, but it's very powerful if you respect its limitations. It's very productive as well. Gold, you say? Yeah, gold, man. Gold has been wild. I have this friend that snagged gold back in what was it, like '08, like 280 an ounce, something like that. And gold's like at a 10x, give or take, more at this point. Gold, wild. As much as but I would still prefer crypto exposure. You wouldn't have known this in '08. You would. I would say that crypto wasn't broadly investable prior to 2020. 2019, if you were really early and you had a foresight in what Lend was doing, because Aave was originally called Lend, or what Bancor was doing 2019 and earlier, you, no, very few had that foresight. And Bancor obviously has flopped since then, but Lend has sure as hell done well, becoming one of the biggest businesses in crypto and the 14th largest bank by deposits in the United States. So Lend has done very well, becoming Aave. Um, but none of this existed prior to 2019. I mean, who would have invested in I mean, a lot of people invested in gold in post '08, but they would have bought the stocks in like '09, '10 when the market started to recover. But gold was literally a better investment than the S&P and Nasdaq. So that brings me back to just keeping it simple and seeing things for what they are, not what you want them to be. And that's why these businesses in crypto are just so meaningful to me. XYZ. X, how much does it cost? Y, how much is it paying? And Z, how likely is it to continue paying into the future? So that's the speculative component. XYZ. Yes, my DCA port is essentially cash for me as well. I don't see them as investments, more like hedge against inflation or hold cash in dollars. I listen to cash, stablecoins, drop it on a debit card, go to supermarket. Bitcoin, drop it on a debit card, go to supermarket. Gold, not as easy to drop on a debit card, but you could do the same thing and go to supermarket. So I define them as cash because there's no cash flow. Anything that doesn't have cash flow is not an investment, in my opinion. That's my definition. Investments are productive businesses that are generating or accumulating capital additional capital. It gets distributed to owners of that business, and that capital is a form of cash flow. My 2 cents. Peter, my man, you appreciate the humor. I appreciate you. Okay, Crush, if only someone were launching a Goldback stable built on Curve. Yeah, it's Goldback stables. Um, I don't know how currency plays out. There's a lot of smart macro folks that are probably thinking about this, and certainly the PhDs at the Fed and the government level. This, what is currency? Currency is not money. They're different things. Um, what is value? What is property? Fuck, what is income? What's the definition of cash? I mean, no joke. In some of my documents, I got what is income? What is gross income? What is adjusted gross income? What is net income? There's literally definitions all over the place, and they're all different definitions. So these are great questions. What is money? What is currency? So is it useful? Probably. How does that? It would be a currency, stablecoin. It wouldn't be a money because the gold is a money. More so a money, and they are building things like that with intrinsic capital appreciation. All right, that's cool. I mean, Frax still has FPI with the inflation adjusted stable, I think, and so I think there's a lot of room for very innovative products, innovative fintech products. Peter, yeah, who would have thought that Bancor fell off? He just plopped. Very unfortunate. Back in 2020 or late 2019, though, those are my three plays. It was Bancor, Kyber, and Synthetics. Oh, that was crazy. Back in Q4 2019, Q1 2020. They did very well. There was some very early signs of what the hell was going on. Synthetics has had trouble recently, and Kyber had its fallout, and Bancor obviously failed over the years. Last decade has been an uh, absolutely wild ride of figuring out what is what kind of technology the system demands, and not only what the system is demanding, but the technology also has to work. And what makes it even harder is the greatest technology isn't always the greatest investment. That means it's like, 90% of a 90% of a 90% is actually a good investment type thing. Fraction of a fraction of a fraction type thought. Yeah, gold was better, especially when you adjusted for inflation. Oh man, then it just got even weirder when you adjust for inflation. Okay, synthetics looking to make a comeback, still holding. No, me, no, 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 no. That's a derivatives market. It's a perp exchange. Synthetics, literally by definition, it's a synthetic market. Certainly not for me nowadays. Um, that's it. Keep it simple. Find this thread. It's in my history. Focus on the philosophy. Find your calm. Sit in a sauna. Listen to listen to grass grow, and only then could you really appreciate the charts and the data and deal with the volatility and the insanity of politics and social media headlines. And once you realize that your base case is no emotion and no thought, and then you're like, okay, what thought is useful? Because the emotions aren't. And then you build your ideas and your decisions based on carefully chosen thoughts that are reasonable and rational. Hope that helps. Friday, April 18th at 12:35 p.m. I appreciate you all joining me today. 190 people made it to the end of the stream, and you are all now a little bit more rational because of it. Enjoy your weekend. Sit in a sauna, relax, breathe, drop the emotions, and be more quantitative, analytical, deductive. Exercise due diligence. This is not a capital management exercise I'm encouraging. It's a personal exercise. Find something, that next level, and how to be just a little bit more rational, and everyone will benefit from doing that. Y'all have a good one. I will catch you next time. Until then, peace.